I think the power of stress testing isn't fully appreciated. People think of it as a capital tool. It's something that's required by the regulators. You put it into your ICAP. But it should be a really important tool in your business decisions. If you're buying another bank, you should stress test the combined portfolio. You don't have lots of back data, you can still do it. I've done it for bank purchases. If you're changing the direction of a portfolio in a major way, you should stress test that outcome. And that will come, I think, that embedding into the different business decisions. But I think that's a really important part of planning. I think that one of the big shifts post-crisis was that the seniority of the risk officers went up, but also the breadth of the areas they cover. So new products, they have a say in new products, in strategy, liquidity risk. It's no longer just credit, market, operational. And operational is being broken down into the subcomponents. There's much more involvement of the risk function in conduct risk, for example, because the large fines and costs coming out of it. So the breadth has got much bigger. A lot of people have a credit background, and you've got to broaden it. They're getting involved in the whole issue of risk culture. How do you change behaviour? How do you reinforce behaviour? So it's a challenging area, and I think the next set of issues are going to be about how the risk functions become more efficient, because partly they've dealt with these issues by just chucking another 1,000 people at certain topics, or another 1,000 people into compliance, but that just can't continue. I think they've got to think very carefully about the information they give to the boards. You cannot just chuck enormous papers onto the board, and you've got to think about the MI, the management information that goes to the risk committee and goes to the board. Does it really get to the heart of the issues? You've got to think about how you present a proposed risk appetite to the board and get them to understand the components and so on, and how that's going to be used. So I think the demands from the regulators around the boards put a lot of onus on the CRO to make sure the right information is really going up and there's the right discussion. And I'm not sure that the standard treatment of board meetings, 3-hour meeting, 4-hour meeting every quarter, quite works. I think they need to have more of a discussion of things like risk stress testing, the risks in the business model, business planning, not just, we've got an item on stress testing and it's down for 20 minutes or 15 minutes, and at the end of that we move on to a different topic. And there's scope to do that if you hold a workshop the night before the board meeting and discuss the stress testing in a more informal environment, I think. I think there's a whole raft of stuff around the way the financial system now connects, that there's been massive growth in shadow banking. You've got linkages of shadow banking into banking, you've got leverage in shadow banking. So I think the understanding of how much risk there is in the system is again not very good, and you've got complexity growing up again in new different types of product. So I think that's a whole area actually that could blow up in some form at some stage.